Hi traders, welcome back to CPR Scalper. So let's see Nifty weekly analysis for the last week from 27 onwards. So this is Nifty chart. Let's get started with the Nifty. So on Monday there was a big red candle here. Okay. So let's look at previous day what happened previous Friday. There was a big trending day on previous Friday, and this level was an important level. Okay, the previous day high was an important level. Okay, this was an important level for us, but anyway, market opened gap down, so this level is anyway not important. Monday, okay, first candle itself is a huge red candle, and it has broken previous day high, previous day low, and S1 support. Okay, so but it is an entry only, but where will you keep your stop loss? So such a big red candle, so almost 100 points, I think, almost 80 points. So it is not a good idea to go short here. So let the price come back to again 50% or high of the candle and make a bearish candle again. Okay, then that is an entry. So this is such a huge red candle, and then price came back again to high of the candle and made a bearish candle. Okay, this is a perfect entry to go short. Okay, this is a perfect entry to go short on this dozy type of candle. Okay, here this is your entry, and you can take profit back to day's low. This is your take profit on this candle. You could have exited. There is one good entry we got on Friday in Nifty. Okay, so and also CPR is little average. I think it's an average CPR around 30 points wide. So we can expect a trending day on this day as well, but it didn't. It was not a trending day. It was kind of, it created a typical day. It created a wide what I would say, a wide initial balance, and then there was an aggressive move in the first 1 hour, and then it was stayed sideways. I think in the previous video where I have mentioned types of market days, there I have mentioned it as a typical day. What happens in a typical day? There was an aggressive movement in first 1 hour, and then rest part of the day it will be sideways. Okay, you could have entered if you could have entered one more opportunity. You got it here because it is a typical day and wide initial balance. Okay, this is the initial balance. When price bounced from here, and again when price came here and made a bullish candle, you could have gone long on this bullish candle. This is one more entry. So there was one entry here, and there was second entry. Two entries we got, and you could have made 4 times of your risk. 4 times of your capital. You could have 4% of your capital. You could have made on Friday in Nifty. Okay, if you followed a basic like price action theory. Okay, this is on Monday. Let's go on Tuesday. Let's say on Tuesday. So for Tuesday, what are the important levels? Monday, because it bounced from here, this is an important level for Tuesday. This was a Monday's price action. So this is an important level, and this is also an important level. Okay, because there was a price momentum, a huge initial balance it formed, and then when price came back again here, it was bounced back. So this is an important level. So we should look at opportunities near these levels on this particular day. So price came almost near to this level, and it did not touch actually. So had the price came exactly here and made a bearish candle, this particular bearish candle is here, then it is an opportunity for us to go short. Okay, this particular red candle is, if it has formed here, then it is an opportunity. You could have gone short till this level. Okay, but in these times, I think what you should do is you can go with half of your position here on this candle. Let's say you are trading with some 10 lots or 5 lots. You can go with if you're trading with 5 or 4 lots, you can take entry here at 2 lots. Wait price come near to this level, and make a bearish candle here, then add extra lots here, increase your lot size. So this you could have done it, but anyway we missed the opportunity here on this day. And the next opportunity we got near CPR break, but CPR is little narrow CPR. Okay, it's not more than 20 points, I think. It's even just 15 points, very narrow CPR. Narrow CPR, so I think we cannot consider it as a breakout because the strength of the CPR is not good. Like it is not that strong. It won't act as a strong support or strong resistance on narrow CPR days. So we should have avoided going short on this red candle because it is not a proper support or resistance breakout. But you could have considered the day low as a support line. Okay, you could have gone short based on this particular level break. Okay, current day low break, and also first initial balance, first 1 hour days initial balance. So this also broken. You would have gone short based on this particular theory, or not based on purely based on CPR. Okay, based on initial balance break, you could have gone short on this particular candle, but where you will give stop loss? Your stop loss is here. See, look at exactly, it just kissed your stop loss and went. See, very minimal. This is called as stop loss hunting. So it will take your stop loss and it will go in your direction. So such days you cannot do anything. It's a bad luck. That's all. You cannot say anything. Your stop loss will just be above the candle. So that's why always keep a room for stop loss. Put somewhere some extra buffer points. Okay, you would have put extra 10 points on this or extra 5 points. Your stop loss would have not hit. Okay, you should take care when you are putting a stop loss properly. Okay, this is a bad day. It hit your stop loss anyway here, and here it did not come to your level to go short. No opportunity, and here it broke the level almost in the evening. You could have gone short here, but look at this. There is a big straight fall. Okay, the breakouts with the straight continuous fall, the continuous momentum. There was no retracement, only back like this. Okay, or there is no consolidation here. At least there should be some consolidation with some green candles or rosy red candles like this. Price has to stay near support for some time and then break. That's a proper breakout. So what happens is usually the continuous momentum, if it breaks, no, with that momentum, it usually fails. Okay, it usually fails this kind of breakouts. But anyway, if you had have gone short here, you would have made 1:1 ratio, but it came here again, it reversed, and finally it hit your stop loss. Okay, this is stop loss. Okay, all your trades went wrong on this particular day. This was a Tuesday. So here, if you have gone short, you stop loss it. Here, if you have gone if you would have gone short, you stop loss it. Both are stop loss hits, but this is a bad luck anyway. This is a good entry only based on the initial balance, and this is not a high probable entry. This is a low probable because of the continuous price momentum and then break. Okay, so I would say here one stop loss hit, 1 hour you lost on this particular day. Okay, so 1 hour on this day loss. Here 4 times of your capital, 4% of your capital you gain. Let's see on Wednesday. So for Wednesday, important levels are, because price has fallen from this level, this is an important level, and this low is not an important level. Okay, this low is not an important level because there was no hardly bounce back. Okay, this level was important, and price also, I mean, like on Wednesday also price started, opening price was above CPR. Anyway, this level is important. Okay, price went to that level and made a bearish candle. This is an entry, good entry, because the price has fallen so much from on this level. So this is kind of a seller's zone. So you could have gone short by putting stop loss here. It came here and then bounced back and it took your stop loss. Okay, yeah, you should have taken your target here. but it did not come. It gave 1:1 and then it hit your stop loss. So this is one stop loss hit day. Okay, we cannot do anything. It hit your stop loss on this. It was a good entry only, but it hit your stop loss. So next day, what is your levels for next day? Let's see. Okay, this is one minus 1 hour day. It hit your stop loss, right? On this day, what are your levels? This level is going to be very important level. This because this is a previous day low, because price has moved from this level to this. So this level is important for this day. And see, exactly price has opened exactly on this particular sellers zone, the previous day's sellers zone. You could have gone short on this candle itself, but there is a wide CPR. Okay, immediately there is a wide CPR. This is going to act as a strong support on this day. So you should avoid this going short on this particular trade. So you should avoid short here, and you could have planned for a long entry here because this level is acting as a strong support. And your stop loss is here. It gave almost 1:2 risk reward. So this is a good trade. It hit your target, and you could have gone short on this candle because it has broken the support line. You would have gone short here for putting your stop loss. It came here, went and it closed below this here. It gave almost 1:1.5 risk reward or 1:1 risk reward. Okay. So this was one good trade. So I would say it is plus 3 hour day. Okay. 1 hour you got from this and 2 hour you got from this trade. And what about this day? Straight away price has broken this resistance. This was the resistance, and it has straight away it has broken the first candle itself broken. So you could have gone long on this candle itself by putting stop loss here, and look at the trending day. Okay, how big trending day it is. You would have got more than 4 hour on this, but as per our strategy, just book 2 hour and exit. So 2 hour on this. So overall, how much you earned this day? 2, 3, 5, 5 plus 4, 9 hour. Total 9 hour. 3 days you got a profit 9 hour. Okay, 9% of your capital minus these 2 days you got 2 stop losses minus 2 hour. See, on a losing days you are losing less, on a winning days you are getting more. This is what a successful trader does. When you lose, you have to quit your you need to shut down your system and put your system aside. Okay, you should not do revenge trading. You should not enter because your stop loss is hit. You will enter anywhere here randomly. You will enter, and you will get too many stop losses, and you will end up in huge loss on these days. So on winning days you got more, on losing days you lost less. So total 7% of your capital you earned on this week. Okay. So please follow risk reward. Whenever you are losing, lose small. Whenever you are gaining, gain big. Okay. On these days you can gain more, 4 hour, 2 hour, 3 hour, 5 hour. Okay. So this much you can earn. When you are losing only 1% 1% of your capital you are losing, here -1 and here -1. So total 7% of your capital. Your return on investment is 7% for this particular week. Okay. Thank you. We'll meet in next week analysis.